Hey guys, Ross here from Shamu, and I'm going to show you in this video how you can get an edge by not listening to the news. Guys, I did not follow my own advice this month, and it cost me a trade. I lost a trade that I got stomped out on because I thought we were going to continue sinking, and we didn't. Now, here's what happened. I was listening to analysts talking about the CPI report come out, and everybody was saying that if it even comes out just a little bit higher than what we expected, that people are going to view this as, oh man, the markets are not reacting properly. They're not responding to the rate hikes, and things are going to tank. In fact, Jamie Dimon, Chase Bank CEO, came out and said 5%. It could drop 5%, the S&P 500, if it comes out even just a little higher. Otherwise, we're looking at 2-3% drop. So here we are, all excited, us bears, because I do believe we're in a bear market. And we're thinking it's going to continue to tank. And I'm going to show you what happened. This is October 12th, October 13th. Let's take a little peeky poo here and see. This is the S&P 500. Here we are right here, Thursday, October 13th. The report comes out Friday, October 14th, and you see it initially tank from 365 down to 357. Same day, though, it rallies back up to 368. So from the previous day, it went from 365, and at its height there, it was at 370. Right now, we are sitting at 379. Now, why does this blow my mind? Because if I did not listen to the news, and I was not paying attention to any of that junk at all, I would have looked at this. Here we are on Thursday, and I would have seen, hey, you know what? We're already pretty low on the RSI. And we are, so I'm not confident that we're going to sink much lower in the moment. In fact, if you were to go back on my channel and look, not too long ago, a couple weeks ago, maybe a month or so ago, I made a video. And I said in that video that I thought that through mid-October to the end of the year, the S&P 500 would experience a little rally before it dropped further. And that is starting to play true. We've seen that happening right now. But I let the news get in my head. And look at this. It continued to climb. I thought we would go ahead and start dipping. I thought it was going to have a further die-off. Nope. We went up. And if I was trading purely off technical analysis, I would have never placed a trade here that would have said that I thought this thing was going to keep dipping. But yet, I did, and it didn't. And so, thankfully, I didn't lose that much money on it, and my wins made up for it, but it was a loss. A loss is nevertheless a loss. And the reality is that the news just gets in your head. I'm a golfer, and I'll tell you something that I've experienced. When I just go out and I golf my game and I have fun and I'm like, you know what, wind's going a little this way, I've been hitting a little this, I'm going to take this kind of shot. And I go based off of what I know, I always play better. But when I spend 2 or 3 days watching YouTube videos and figuring out, I get all this noise in my head as to what I think, and it clouds my vision. And I can't see what I think is going to clearly happen based off of just technical analysis. And or I guess you could call it technical analysis even in golf, but just based off of, I'm trying to do this with my hand, my arms, I'm trying to get myself the way that I've been watching these videos, throws my game for a loop. Same thing happened. The reality is, my friends, that if you're doing like me, short-term trading, the institutions control the markets. The market's total. What we're trading on is the in-between. So, for instance, if the institutions are pricing in a specific stock at a certain price, and that's what everyone's heading towards, it's likely going to over time get there. Our goal is to make the money in the betweens in the price action. And so, with that in mind, I'm not going to listen to all of the noise. In fact, there have been plenty of times where I'm trading and I think that something's going to tank, and I'm not even watching the news, and it tanks, and it just so happens there was bad news. So I personally believe that in short-term trading, technical analysis will always beat fundamentals. If you're looking at long holds, you better have the fundamentals down. You better know the finances of a company. You better know what their plans for growth are, why you think they're going to continue to go up, etc. But if we're doing 2-week, 3-week, 4-week plays, that matters way less. It matters way less. But you know what does matter? What the short-term valuation of a company is. How do you figure out what is the value of something right now? Easy indicator for that, I'll show it to you right now, the RSI. This right down here. This shows us the output, the upside divided by the downside. When you're below 30, you are in a oversold position. You are undervalued. When you are above 70, you are in a overvalued position for the time frame. So here's an example of this. Look, we're above 70 right here, and it starts to tank. We get here below 30, and it starts to go back up. It's really darn simple. Here we are under 30, it starts to go up. Here we are over 70, and it comes down, and what it does, it starts to go down. It's pretty darn easy to follow the relative strength index. And so if you're looking for a simple way to figure out what is the value of something, because at the end of the day, here's what happens. Bad news can come out. Okay, bad news can come out. Everything can get shaken for 2 to 3 days, maybe a little bit more. But then what happens? Things start going back to what something's actually valued at. That's what ends up happening. So I guess I would rather play in the consistency of what something's actually valued at, because usually when something happens, it's just an emotional reaction, and then people think about it, they process that data. Go back and look at what happened to this chart here on the 12th. Look at this, because in the morning, the market dipped. I'm sorry, on the 14th. In the morning, the market dipped. It did. I was like, woohoo, we're making money. And then what happened? They processed the data, they thought about it, and it shot way back up. I don't want to have to think about, and I'll tell you, it's very hard and nearly impossible to sit there and think, well, how's the market going to react to this? And then you can stress yourself out thinking about how the market's going to react to something. Some people might say that's the stupidest way to trade off only technicals. I agree if you're talking about long-term trading. But when you're talking about swing trading on a monthly basis, on a weekly basis, because I don't day trade. I'm not a day trader. If you're talking about swing trading, it makes perfect sense. Because if something is undervalued, people are going to buy it up. And if something's overvalued, people are going to start selling it and collecting their profits. It's just how it works. With that said, guys, I hope you enjoyed this video. If you did, please like and subscribe for the next one. Have a great day.